Hi there, Rosie Green. I am a business development representative for AmeriTitle, and I have with me today Eric Templeton. He is our Vice President and Regional Manager for AmeriTitle Willamette Valley Operations. We are going into week 4 of sharing a new report that Eric created. It's called the Weekly Market Analysis. And as the weeks have progressed, this report has evolved, and we do have some new graphs that are going to be shared in it this week. So we thought it would be a good time to have Eric walk us through the report and help us get the most out of it. So I'll turn it over to you, Eric, to walk us through your report.
Thank you, and good seeing you, Rosie.
Good to see you.
Yeah, as Rosie said, I created this report about a month ago, kind of when this whole COVID thing first hit, trying to get a feel on some key indicators and what's happening in real time to give us a head start on kind of knowing where the market's going. And so we put it in a form that we thought was shareable, so we've been sending it out to our clients. If you haven't been getting it, certainly contact your AmeriTitle business development representative, and we'll make sure to get you on a distribution list. So what I've done is taken WMLS data and just broke it into weeks. So we can look at weekly totals and compare that to the same week of 2019. And then also 4-week averages. Usually you get better information if you have a longer period of time. And so we take these 4-month rolling averages. So this right here would be the 4 weeks ending on April 25th. So just on Saturday. And it gives you kind of a better indication of what's happening without all the fluctuations that you might have from week to week. So it's basically a month's worth of information, but broken up into 4-week chunks as we move along. This data is residential. It's a residential search, 5 acres or less. So it doesn't include any large properties. So 5 acres or less residential in the WMLS area, not including the OS area. So just kind of in this Willamette Valley area. That's what it includes. So just to go through the cover sheet, this kind of gives you the nitty-gritty data, but then I would encourage you to go beyond that and look at the graphs, because that's where you can see trends and what's happening over time. So good news this week, we had 204 listings. So while it's 23% less than the same week 17 of 2019, it's better than we've done over the last 4 weeks. So if the last 4 weeks is sort of COVID time, the 204 is a pretty good number. So 204 new listings, 23% less than the same week last year. And over the 4 weeks, we're 18% below last year. So we're not listing at the same rate we were a year ago. Newly under contract, again, this is really good news, because this is, as you'll see later, we haven't had as many deals going into contract. But in fact, in this week of 2020, we're 7% ahead of last year in the same week. And we're also ahead of what we've done over the last 4-week average. So just like listings, we're actually listing more and putting more under contract than we have over this period of time. And in fact, newly under contract, we're better than we were a year ago. But for the 4-week average, we're 19% below where we were. So we're running about 20% behind on new listings and what goes under contract. Sold is a different story. And actually, sold units has been pretty robust these last few weeks. And that's pretty much because we're selling what went under contract prior to all this happening. So we've been kind of getting that inventory through, and we haven't been putting as much under contract. So now that's catching up. So the 91 sold units is 41% below what we did a year ago. But you'll see in the graph that week 17 in 2019 was actually a pretty good month. So this is not as scary as it looks. We've averaged 134 over this 4-week period, which is just slightly below what we did in 2019. Terminations, and this includes withdrawn listings and expired. So it's everything that kind of goes off the MLS in a non-sales way. We had 40 listings drop off, not sold, but just dropped, which is 14% more than where we were a year ago. And for the 4-week period, we're at 51 on average, which is 40% more. So we're definitely, we've got a situation, it's probably no surprise to anybody that some listings have been withdrawn and terminated and expired during this time. So that all factors into inventory, and our inventory has been hanging tough, just over 2,000 listings in those categories, residential, less than 5 acres in the Willamette Valley. So we're 13%, this week we're 13% below the same week, 2019, and we've averaged right at 2,100 which is also 13% behind last year. And then the last thing that I wanted to look at was price reductions. So at what clip are we reducing prices on our listings? We had 105 price reductions this last week, which is 69% more than we had in 2019. And we've averaged 85 over the 4-week period, which is also 69% less than we were a year ago. So that's a snapshot. If you just did one thing, you could look at that if you didn't have time to go into the graphs, but I recommend the graphs. So we'll go down to the second page of the report. And on all these reports, or most of these reports, I should say, the top section is going to be the week ended, whatever week we're in. So week 17, this is what happened week 17, and the bottom part is the 4-week average. So generally speaking, it's a lot easier to look at the 4-week average because it's more normalized. But you can kind of glance at what's happened this week. Kind of hard to tell where we're at. So I did darken the same week in the prior year. So you got 2018 and 2019, 2020. So you can see our listings in 2020, just over 200, which is not where we were a year ago. We were up over 250 for the same week. But in 2018, we were under 200. So not a bad week, a fairly normal week as far as listings go. And you can see the sales really dropped off compared to last year. We were right there. The year before that, we were right there. So that 91 sales is a pretty low number. But if we go down and look at, I'm sorry, and the left side is going to be your data. The right side would be that same data relative to the same week the prior year. So you got your 0 going down the middle. If it's above the 0, it means we did better than the year before. And if it's below, it means it was lower than the year before. So sales, you can see 40% below the year before, which is the biggest drop off we've had over the last almost year and a half from that week. So let's drop down to the 4-week average. Again, easier to see. So you can see that generally speaking on the listings and the sales, we go up into the summertime and then down into the wintertime. With listings outpacing sales for the most part until you get to the holiday months. And then sales take over with listings dropping off. So same thing happened in 2019 in the end there. So 2020 is a little bit different because we're not building to the summer. We've dropped off these last 4 weeks, so we can see that there. So not crazy drop off, but definitely a drop off. And again, the sales, typically that would build into the summertime, and we're seeing the drop off happening there. So far for the year on our listing, on the listings, we've listed less, generally speaking, than we did the year before. And on the sales, we've sold more, generally speaking, than we did the year before. The exception being this last period of time. So the last 4 weeks are lower than what happened in 2019, but that's the only month so far this year that we've had lower sales in a 4-week period of time. So it's exciting for the next week to come out to see if that continues or if we right the ship. Okay, moving on to, I put terminations and price reductions on the same graph just to have as few sheets as possible. They really don't have much to do with each other, but they tend to move kind of in the same way because if your market is more distressed, you're gonna have more listings being terminated and more price reductions. So looking at these together, looking at the terms first, these spikes at the first of the year, that's mostly expired listings. So a lot of listings expire when the year changes over. So you get those spikes happening there. Let's drop down to the averages. So you can see typically on the terminations, you get that spike at the end of the year, beginning of the year, then they drop down, spike here. So you see a little bit of a spike up that's not typical, but not totally out of the ordinary. So we are, with terminations, we're 40% more than the same period a year ago. So that's the yellow. Last year it was down here. The year before that it's down here. So definitely more terminations happening. As far as price reductions go, that's kind of the big story here. That's where we're 70% over on the average. So we're averaging, what are we at, 85 price reductions. And typically this time of year, it's the hot season. And so we're not really reducing prices at that rate. So definitely some aggressive techniques to try to get those listings under contract. Looking at it relative to the same year. So on both terminations and price reductions, if you look at 2019, this would be compared to 2018, all but just a few months, both of those indicators were up over the year before. So we're being a little bit more aggressive these days as far as price reductions go, and we're terminating more listings as well. So that's not new in 2020. That was happening in 2019. And in fact, where we're at right now with price reductions, it is 70% over where we were last year at the same time, but it's not even, well, we had some months coming up here. So this is week 17 right here. So the next few weeks, we had even more price reductions than we're seeing right now. So nothing too out of the ordinary there. Okay, so we've already seen all these numbers, but this is looking at inventory in a different way. So you're looking at the listings going up and you're looking at terminations and sales going down to kind of see how those things are shaping up and what they're doing to inventory. So over here on the right, you've got a net change to inventory. And the week that we just finished, our net change was 73. So we added 73 into our total inventory, meaning that we listed more than we sold and were terminated. 73, it was 76 the year before during that same week. So it's about the same. And sold units per listed units. So that's just looking at what we're selling relative to what we're listing. We're almost at 50%. So we sold about 44.6% of the listed units. It was 58% a year ago. Okay, so we'll go down to the average. Makes more sense. You can see your expirations that happen at the beginning of the year. And if it happened the first week of January, you can see that for 4 weeks after that on this 4-week rolling average. So for the most part, we build inventory first part of the year, and then we reduce inventory the second part of the year. That's what happened in 2019. Now we're getting, we started off reducing, which is not atypical. Then we started to build, and now we're reducing. So that would be the non-typical part, would be that we're reducing inventory at this period of time, which usually we're building at this point. Okay, this is a new graph. It's fairly, or it's different than the others. So it takes up the whole width of the report. And this is total listings. This is the inventory at any point in time. So each week in 2018, 19, and 20, this is the inventory that we had during that week. And it's categorized by the current status. So if I look at this week that we're in right now, our inventory, total inventory is at 2155. 158 of those in yellow are in preview status. 1,017 are active. We got 698 under contract, and 282 is purple, and those are pending. So if you add those together, you know, we've got almost 1,000 listings that are either under contract or pending, about the same as we have that are active. So if you go back in time, of course, you don't have any active. So you can just look at, you know, take a week here, and you have this much inventory. The green is what eventually expired after this week. And then the orange is what terminated after this week, and the black is what sold. So as you get into the more current months, you can see all this color down here. This is active inventory. And so this blue one's down here, it means they're still active today, and they were part of the inventory in, say, the 37th week of 2019. So hopefully that makes sense to you all. So this just basically says what the inventory is. We know we had a little tick up in inventory this last week, and here's the phases that it's in as of Sunday morning when I put this together. Okay, so down here we've got 4-week averages, and we're looking at absorption rate and months of inventory. And this is basically just an inverse of each other. So whichever way you like to look at it, it gives you the information. So right now the absorption rate is at 28%, and it was 26% the year before. It was a little bit higher than that the year before that. You can see these dark bars. And absorption is just how much of our available units we're selling in a given period of time. So it's sales divided by units available. So right now, 28% of the units available we're selling in any given period of time. So you replenish those, you sell off the 28%. This looks pretty typical. So nothing out of the ordinary here. So if we're listing less and selling less, your absorption rate would stay the same. If those go down the same proportions. If something changes and we're listing a bunch and selling not very many, then you're going to see your absorption drop. But right now this looks pretty normal, which means the inventory is going to also look normal. So we're currently at 3.6 months of inventory, which is about where we were the same week, or the same period of time, that same 4-week average over last year and over 2018. So typically your inventory goes down in the summer, up in the winter, down in the summer, up in the winter. It's going down and looks pretty normal. Next one, we're looking at listings that go under contract in a given week, and also sales. We've already looked at sales relative to listings, but now we're looking at sales relative to what went under contract. So it's a little scattered here. I'm going to skip the what happened this week because that's all over the place, and let's look at trends. These are 4-week averages. So typically we put more under contract, that's the gray, to start the year off. So kind of halfway through the year and sometime in the summer, we start selling more than we put under contract. And you get down to those holiday months where we're not putting much under contract and we're closing the things that we put under contract the month before, typically. Same thing happened in 2019, under contract, and then we sell them. Of course, these things are happening as you go along, but typically you're just putting more under contract to start the year off, selling more than you put into contract to finish the year. Started off this year the same way, and then you can see the COVID effect where what we put under contract dropped off pretty significantly. That's not typical this time of year that would drop off. Sales continue to be fairly robust because again, we're selling things here that we put under contract here. And with what went under contract dropping off, now you're going to start seeing sales drop off. It would stand to reason anyway. And then looking at that relative to the same period in the prior year, you can really see what went under contract dropping off. So this is looking at those 4-week averages compared to the year before. We're at most 30% off. Currently, we're a little bit less than 20% off of the year before. Sales have been robust up until this last 4-week period where it's below where we were the year before. Okay, and the last one, this I don't expect to change much. We're going to track it and watch it, but we're looking at how long it takes, the dark lines here, how long it takes to put it under contract. So from listing to going under contract in a given period of time, how long does that take? And right now we're averaging 39 days. So for the average listing in the wintertime, you're up higher, you're more like 60 days it takes to put under contract typically. And as you get in the springtime, this is pretty normal, this 39 days. So if you put a listing and make it active, 40 days later, it's going to sell on average. And you're going to put it under contract. And then above that would be the days from it going under contract to it closing. So how long is it in escrow and pops out the other side. So I don't, again, expect, unless there's something crazy that happens in the lending world or appraisals or something like that, these timelines don't really change that much. So we're looking at about a 40-day close once it goes under contract and about 40 days to put it under contract. And then this is your new contracts as a percentage of units sold. So we know that this last 4-week period of time that we put more under contract than we sold. So that's above 100%. If it's below, that means we're selling more than we put under contract. So it's kind of like that orange and gray graph we looked at before where you're putting more under contract than you're selling, and then it goes the opposite. This is just another way to look at that. So what percentage of those, what percentage of sales are we putting under contract? So it's looked pretty typical in the beginning, and then that started to drop. And we've actually been putting more or selling more than we put under contract the last few, and now that popped back up. So we'll keep our eye on that. People have been asking me about prices. Again, as long as the inventory stays the same, you know, we haven't really changed whether it's a buyer's market or seller's market. I think there's some advantages and disadvantages for both sides, but nothing really statistically would make it seem like there's going to be a big change here. So the median sales price, true to form, has just been kind of clipping along and steadily increasing. So we're at $316,000 for the last 4-week average, which is 6% more than we were a year ago. And then sold price to list price. This would be the original list price, which may have had a price reduction, may not have, and then it eventually sold at a price. And this is looking at the ratio between what it actually sold at and what it originally listed at. And typically that's going to be around 100%, a little bit over in a hot market and a little bit under in a cooler market. So this looks pretty normal. So we're at 99.7%. So we're almost getting full price on average, better than we were a year ago at this time, and not quite as good as we were in 2018 at this time. So this looks normal, this looks normal, this looks normal. So on this one, there's nothing that jumps out that would cause concern. So if I were to highlight things, I would highlight the fact that our sales are down compared to where they've been. But again, that's not, if you were looking at this report over the last 4 weeks, you wouldn't be surprised at that because you've seen what's been going under contract has been down. So the positives on this are the fact that listings are up from where they have been, even though they're down from where they were a year ago. This is good. And what's gone under contract, this is really exciting, that it's even better than it was a year ago and better than it's been over the last 4 weeks. So that's good. Inventory staying even. I think we like to see that. There's some price reductions out there that could cause concern, but I think it's just sellers are motivated to get people out of their homes and get them sold and not have people traipsing through them. So you're going to have some motivated sellers, I'm sure, and prices are going down. So I don't think there's anything to be concerned about there. Terminations, I like to see this, that we're terminating fewer listings than we have over the last 4 weeks. So in general, I would say since I've been putting this report together, I'm more optimistic with this week's results than I have been with any of the other week's results. So more to come. We're going to put this out every week and we can just kind of see how these numbers roll out. So Rosie, do you have any questions?
I don't have any questions, but I want to say thank you so much for taking the time to put this report together for us each week. It is showing a lot more bright spots than I think we even anticipated. So I think that's very helpful to our clients as your buyers, sellers, and investors are reaching out to you for reassurance. We hope that you find this report helpful and arming you with the facts and the knowledge about our local market. If you do have any questions about the data, Eric loves to help walk through it, and we're happy to answer any questions that you have. We also want to share how appreciative we are of our realtors and lenders for all of your hard work, keeping our industry moving forward. And we look forward to working with all of you real soon. So thank you, Eric.
Thank you, Rosie.